Shares of Nvidia up about 5% since announcing that it does expect to be able to resume selling those H20 chips in China, a move that could add some fresh fuel for China's AI ambitions. For that, we'll turn to Deirdre Bosa today in today's Tech Check. Happy Friday, Dee.
Hey, happy Friday. Good morning, Carl. So the plus side for the U.S. of this development is that the momentum will still run on American rails. With the H20s return, Nvidia, it remains the backbone of Chinese AI, not just through hardware, but through CUDA software too, which we talked about. It locks developers into Nvidia's ecosystem. The downside, though, is that Chinese labs, they're getting very good at doing more with less. DeepSeek's original R1 and now the latest breakout challenger, Kimi K2, they have proved that models can be scaled and optimized on far less performant hardware. Now, despite the export ban, they've already been gaining ground, Chinese models. Take a look at the model rankings on elamarina.ai. Kimi 2, an open source model from Alibaba-backed startup Moonshot, it's in 5th place overall, jumping ahead of DeepSeek. The next non-Chinese open source model on the leaderboard, that's Mistral's, while Meta's Llama, which was once the gold standard in open source, it has fallen way down to spot number 34. Now, the hardware story may be shifting again. Nvidia is preparing the B30. This is another export-compliant chip just for China, with shipments expected as early as this quarter. AMD is sampling a China-legal version of its MI300X. The net effect, guys, is that instead of starving China's AI push, the U.S. policy is creating a parallel hardware channel just trimmed for compliance. And really, that's exactly what policymakers like AI star David Sachs intended to do. But this also opens up a new, extremely competitive leg of the AI race, where it's not about slowing anyone down, but about who can innovate and who can execute better. Markets, they could start to reflect that shift. The NASDAQ may be hitting fresh record highs, but the Chinese tech index, it is quietly outperforming this year. The K-Web basket that includes Alibaba, Baidu, Tencent, others, that's up 25% year to date versus the NASDAQ's 8%. And longer term, guys, there is another trade-off. The more China gets access to U.S. chips, the less pressure there is to use and even develop its own. So that could slow their independence and may help keep a lid on Huawei's rise. That is the point of all of this. One major caveat, though, none of this is guaranteed. Just this morning, the top Republican who chairs the House China Committee, he sent a letter to the Commerce Department objecting to the resumption of H20 shipments. So a reminder that this dynamic can change at any time, and so can the trade-offs.
All right, Deirdre, thank you very much. Something to watch. Our Deirdre Bosa.